Okay. Just very quickly, what are 2 reasons not to buy on this rising window? And the concept here is looking at the overall technical picture. Candlesticks should not be viewed in isolation. We have to look at it through the prism of current market conditions. And we saw it before, we had some doji and shooting stars, but current market conditions, the markets were making higher closes. And even when we confirmed a low close, we had a rising window. So here we have a rising window. What are 2 reasons? What are 2 reasons we would not be buying on that rising window? One should jump out at us right away. Resistance. Yeah, there's 2 reasons for resistance. We have this falling window, right? And just very basically, the recent high. Right?
And it got blocked right there with that little candle.
Right here. So
it went above it, and then it shoved it back into the trading range.
Down here.
The big whack right there.
Right. So if you're buying on this rising window here, you're buying at resistance. Yes. Sure.
You're saying that falling window is still valid because even though you had to close inside the window, you can close above that window.
Right. Okay. Right. Jim is saying, although we had the falling window here, and although the market got into the window is still valid until we close above the top of the window. Yes, that's right. One thing to keep in mind, because I talk about how important windows are. Here we have a rising window. The window's resistance is still valid until the market closes above it. Okay? So let's say the market, well, let's look at here. Let me do the rising window. The rising window should be first support here. The market closed under the rising window. It held it for a few sessions. It closed under it. Now, let's say instead of this, the market did this and then comes back down. Okay. Do we still use this window as a potential support area?
It's already been tested.
Okay, how many say yes? I love windows. As support, the market, remember that it was support here. It held it for a few sessions. The market closed into the support area, the bottom of the window. Now, instead of selling off as it did, let's say the market moved up and is coming back down, and we're now at right here. We're right here. Okay. Is this window still support? No. Once the window is broken, we forget about it. Okay, we don't look at old windows. If a window is broken, support or resistance, you forget about it. As a broken window, yeah, you don't want a broken window. You don't want a broken window in the house. So,
Steve, that also kind of did what Ken was saying. When you go back into large gaps, it looked very close to 50% of the window before it fell and came 50%. Down. You couldn't get a real body to close above that 50% line.
Yeah. Okay, and just a few more questions. Okay, sure. So it closed, when we say broke the window, closed above the window. Okay.
Yeah, my question is after a market goes back and breaks a window.
Okay, so you want to look at the rising window, or it doesn't matter?
I want you to draw the same diagram you drew.
Okay, this one?
No.
Oh, this one? Okay, here's the rising window. Okay.
Where you gave us an example of maybe the market would jump back up. But you just drew it.
Over here?
Yeah, you.
Oh, okay, I'm sorry. Yeah, so the market, okay, instead of selling off, it came back up, and the market's here now.
Could you then use that as resistance? You're saying no.
Okay, not the window. What would happen is, and this, say there's a rising window. And the market bounces here, rallies, the window holds its support. Now, once the window support is broken, okay, the market rallies, okay, this is not support. Okay. However, let's say we have a similar scenario. The market moves up, there's a rising window, it tests it, it rallies, it comes back, it tests it again, it rallies, and then it does this. Okay. and then it starts moving up, what becomes resistance?
The window.
It's really not the window, it's what happened because of the window. What happened is the window formed a support area, right? So what happened is that old support should become resistance.
So you're just not looking at it
You're
as
not
a
looking at the
anymore.
window, right? The window may have caused the support, but the window itself is not the reason that would work. And that's why I did this, because if it was tested once, I wouldn't use the change of polarity. See? So if it's a multiple tested support area, which may have been caused because the window was there, but I'm not looking at the window as the reason for the resistance. I'm looking at prior support as resistance. The window may have been the cause, but the effect was the prior support area. Great question. Candles in context. Okay, what's different about the doji at A than the doji at B? And this is what's going to come up in your trading strategies. You're going to see similar patterns or candlestick signals, and we have to put them through the context of the overall market condition. Okay, we all should recognize that doji made a new high close in both A and B. Okay, but if we're a little bit more, well, let me ask you, which one would we think about at minimum lightening up on longs, and why? B. And why is that? As compared to A, what's the difference? Resistance, right? One of our guidelines. The higher the shooting star becomes a potential resistance area. Okay. And again, I'd probably have to go back further to see if this was at a resistance area, this doji, but let's assume it's not. So it's the same signal. It's a doji, but it's completely dependent on the market on how we trade with it. The second doji was confirming resistance. I'd be certainly thinking about lightening up on longs, and in fact, I would be selling short on that doji. Why? It broke resistance and couldn't hold above it. Right. One of those falling off the roofs. So you didn't even have to wait for the doji. As soon as the market pulled under 50, you sell short, you keep a stop here, and your target is the recent low over here.
I have a question about the falling off the roof.
Okay.
Do you need to see a close below your resistance?
The question is, she's saying for the falling off the roof, do you have to see a close under the resistance area, the old resistance area? Yes. Yeah, because if the market closes above the top of the resistance area, it's a new high close for the move. So, and that's a great point. So if the market if you shorted here under 50 intraday, if the market closed above 50, you'd be out of the short position. Good question. Okay. What are three reasons the market's ascending? However, what are three reasons for caution? And you should be able to pick this up pretty quickly. Shout them out. What do you think? One should be really obvious. Long upper shadow. Yeah, actually, that's the one that's saying long upper shadows. That's the one that's actually a little less obvious to people. What else? It's at resistance. That to me is really critical. It's at a resistance area. And what else? A single candlestick line. What do we see? A doji. Right. So essentially we have a doji at a resistance area and some long upper shadows. By the way, this is not a shooting star, although I'd be negative on the line, but this has really come after an uptrend. I guess it depends how you define trend, but that actually came after a little bit of a downtrend. But the long upper shadow certainly would get me very nervous. Okay, and this will be our last one. Okay, what are the reversal signals, and how would we trade with them? So let's go through this. Okay, what's that? Carefully. Okay, so 1, 2. Okay, reversal signal here at 1, obviously a bearish engulfing pattern. Okay. Now, would we be selling short on this bearish engulfing pattern? And imagine this is what would you do here? You see a candlestick signal, an alert. That's all it is. It's an alert, bearish engulfing pattern. So, what's the risk? What's the reward? So, you tell me. Yeah, it might be hard to see the numbers, but this is resistance. Where would you see your first support level? And it doesn't have to be a number. Give me a signal, a candlestick signal. It might be a little hard to see. Small window, yeah, over here. This would not be a good risk-reward trade. And this is very similar to the chart before we saw. Remember with the trading band, with the bearish engulfing pattern? I would rather, this is an alert. And what I would say on our charting system, our service is bearish engulfing pattern, confirming resistance, looks like the market could be topping out, need to close under the rising window to confirm bearish implications hinted at by the bearish engulfing pattern. Okay, I'm not that verbose when I talk, when I write it down, but that's essentially what it is. Need to close under the rising window to confirm the bearish implications. So I would be selling under the rising window. And this is really interesting because this brings up the chart we were talking about before. Once the market broke under the rising window, what became resistance? The rising window, but it wasn't because the window wasn't resistance. What was resistance? The support level brought on by the rising window became resistance. Okay, 2. Okay, what's the signal? Shooting star. Okay. Okay. Ask yourself, would you buy, sell, or why? Okay. What is it? You have the mic?